Aloha, ladies and gentlemen. Welcome to day 7 of the short strangle position on FCX. It is Monday, August 11th, 2025, 10:57 a.m. Hawaiian Standard Time. Let's take a look at FCX. It happens to be the only trade we have on that expires this week, so I have it in the zero DTE. And overall, up. We're up on the position. We have three different short strikes. We're short a $36 put, which has about a 6% chance of expiring in the money. We're short a $38 put, which has less than a 5% chance of expiring in the money. And you might notice that the 38 strike is close, is actually closer to where the stock is trading. And it would appear that these two might be backwards, or somehow something is kind of wonky here, because to have a 4% chance here and a 6% chance here doesn't really make any sense. But let's just say between the both of them, well, it shouldn't be between the both of them, because this 36 is significantly lower than 38 for the stock. But let's just sum it up to be fast and say, like, there's around a 5% chance. That's it. It's a low chance. Out of 100, there's probably 5 or less than 5% chance, probably less than 5% chance that this $36 put gets assigned. And there's probably around a 5% chance that this 38 put gets assigned. Is that anything that we really need to look more into? For me personally, no. And for a lot of people, once you're skilled at doing this, you won't need to. But you could if you wanted to. So, as an example of looking more into it, the next one we're looking at here is the short 44 call. Now, this one, almost 7% chance of being assigned. We see that it's profitable at the moment, and delta 7.5 roughly. Sold it for $10. Right now, the last price it traded for was 6, and the current bid and ask is 5 and 6 cents. Let's take a look at the stock chart. This is today's stock chart. I have it zoomed in a bit, which you can tell by looking down here. But I've got it zoomed in, so we're not seeing a full year. We're just seeing from about this time period, right in there, just around sort of the beginning of June. And so here's the trading action of the day. And we're specifically looking at this chart to question, to answer the question of, do we need to do anything about this $44 call? Because the way that I'm running this strategy for the week is that I have the cash to buy, to fulfill the agreement of the 38 and the $36 put, but I do not have the 100 shares to fulfill the agreement of the short $44 call. So part of managing the strategy is being very diligent that I know I have the cash to buy 100 shares before it hits 44. I know I have the cash, but I actually have to do it. On the put side, it'll automatically be assigned. It's not like that with this. So today is Monday. We have 5 days left. Right, Monday, of course, Tuesday, and Wednesday. There's Thursday, and then there's Friday. At the end of Friday is the real judgment day for this particular 11-day trade. And so now, what happened, and should we do anything? What do we need to do? Because we have 4 days to do it. Is the point? Monday is gone. Now we have Tuesday and then the end of Friday. So we don't really want to sit around and wait to see what happens on Friday, because these are time decaying time decaying instruments that we sold. So if we're going to do something to it, we need to do it kind of quickly while there's still some value in it, because the closer it gets to expiration, the the more time value it loses, which is good for us and why we like to sell these options. But as far as adjusting it, you want to adjust as early as possible so you can have that time value also aid in the cost of the adjustment. So to answer that question, we look at what did the price do today? And here's where it closed yesterday, right in there, right? And then today it gapped up in the morning. It gapped up all the way up here. Now look over here at the O and the H while I put my cursor on that. So it gapped up to around it opened at 42.56. So it gapped open to 42.56, hit a high of one more penny, 42.57, and then went down. But the fact is, it still gapped up. That's true. That's still a relevant fact. The next part, though, is where did it close? And where it closed was almost where it opened on Friday, which could be building a base to go higher, because look at it, it's been going higher. And it gapped up on Thursday to Friday, it gapped up. So it's testing how far it's going to go up. It's probably testing this $43 range, or it's in the process of that happening. Because what will end up happening as price, even by in 10 cents increments, as it makes a little higher of a base in 10-cent increments or 15-cent increments or whatever it is, these small increments. See how it starts rising a bit above this? And then once it starts, getting above that 42 and staying above 42, then it's like making a base to get over here to 43, then start coming up here. But the fact is, it didn't today. It closed below 42. So 42 is the price that I'm going to be watching, and watching it very closely into the like 10-cent increments. Is it 42.10 or is it 42.20? Does it start building a base closer to 42.25 or is it 42.10? Just being sensitive to these different changes, because that will be like the sort of the easiest indication of, is it going to go up higher and compromise that $44 call. At the moment, I personally don't think so. I think that what will happen is it will probably trade. Um, I don't know. I'm not actually going to say anything that I think might happen, other than overall, I think that what will happen is, I think this is going to be a profitable trade. We have two short puts, one short call, and I think everything is going according to plan. And that is what I think will happen. That's my prediction. Okay, you guys have a great day. Bye bye.